Hey everybody, back with another daily update video. It is Tuesday, June 9th. It is 5:10 p.m. so the markets are closed. We're in after hours trading right now. But I personally had a great day in the market, and my original subscribers know exactly why. Look at my favorite stock, AMD. It was up almost 6.5% today. It went from trading in the $52, low $53 range and just absolutely took off, and now it's trading above $56. So the market overall kind of looks like an opposite day of what happened yesterday, because yesterday all of the markets, or all of the stocks, were green. All of the little sectors were green except for semiconductors, which were in the red, specifically AMD and such. But today AMD, Nvidia, they went up. The big tech stocks went up. These were all down yesterday, and the rest of the market went down. So personally for me, I'm happy, because not only was I able to sell covered calls on AMD, but I was also able to make sure, or be more secure in my puts. So let's talk about the trades I made. So here's the graph of AMD. So you can see pre-market, it opened up a little bit in the red. Market opened up at 52.77, about 20 cents less than where we closed yesterday, and then it absolutely blasted off and then just slowly kept trickling higher and higher all day long. So I sold covered calls on AMD first thing in the morning, because when I saw it took off, the market in general has been very volatile within the first 15-20 minutes of trading. And usually what happens is that either stocks will go up really hard and really fast and then come back down to earth or to reality, or they'll tank really hard and really fast and then come back up and just kind of level off. So once I saw that AMD just blasted off, I wanted to lock in good premiums on my covered calls that I wanted to sell, because I was afraid that if I didn't do it now and waited, well, that AMD might come back down to earth and then trade sideways again, or maybe going in the red like it's been doing for the past couple of days. So I was a little bit early in terms of, once AMD was around like high 53s, 54s, I sold covered calls at the $55 strike price. So let's take a look right now. See, right now they're in the money, because at the time AMD was not selling for $55. It was selling for 53, 54-ish when I sold the calls. So I was able to sell my calls for 55 cents in premium per share, or $55 per contract. And if you remember from my last video, I have 200 shares of AMD. So I was able to sell 2 contracts at $55 each. So I collected $110 in premium by selling those 2 contracts. In retrospect, if I had waited till the end of the day, I could have sold even higher strikes, like let's say 57 or 58, and collected even more premium. Because right now, 55 strike is in the money. I mean, in theory, if I waited till the end of the day and sold the in the money 55 strike, I would have collected almost $200 per contract. And you have to remember that you also get the stock appreciation if your shares get called away. So my cost basis of AMD is $52.95. So if my shares get called away, if AMD stays above $55 on end of day Friday, it's $55 minus $52.95, which is what I own the shares for. That would be $2.05 of stock appreciation per share. So times 200 shares that I own, that's an extra $410 I would make. So let's say end of day Friday, AMD closes at $55.01 or higher, then I would make $410 in stock appreciation plus my $110 in premium. So I would have a return of $520 just on AMD for this week. So if you want to calculate how much money I have into this, so let's just say I have 200 shares at $52.95. So I have $10,590 in value in my shares, and I sold a put at the $50 strike price. So I have essentially $5,000 in collateral that's tied up there. So that's $15,590. So if I take my potential max profit this week of $520 and divide it by 15,590, I would have a return this week of about 3.3% just off my one stock of AMD, which would be absolutely fantastic. And then if you remember from my video yesterday, I also have a play on Micron, so I sold a put on Micron for $27 as well. So I would get an over 3% return on my risk this week, which it's looking promising. I don't want to jinx it, knock on wood, but I'm very happy with AMD. I love this AMD stock. It's been so good to me over the days. But if we just take a look at the graph of AMD, we can see that since it popped today, it broke above the 78.6% Fibonacci level, which was roughly $54.50. And now it's trading between the 78.6 and the 100% Fibonacci level. So the reason why I don't think AMD is going to stay at 56, I do suspect it's going to trickle down slowly by end of day Friday. And that's also the reason why I didn't sell or didn't want to sell a higher strike at, let's say, 56, 57, 58, because I do want my shares to get called away. Because again, I'm just nervous about the market reaching all-time highs or even going higher than all-time highs. Because as we can see the past 2 days, I think the market in general doesn't like it. A lot of these past days recently have been the market trading sideways or been a little bit in the red. I think a lot of people are like me, and they're kind of questioning, are we really going to hit new all-time highs in the midst of what's been going on in the world? So I'm cautiously, waiting for a pullback, maybe even another giant dip like we had in March. But that's why I want to be cash as much as possible. So I would like to get in and out of shares relatively quickly. I don't want to end up bag holding. So I don't think, I think my $55 strike will be pretty safe. If not, it's not the end of the world. I'll just sell another covered call on it next week. Or like I said, maybe next week I can just sell my shares off completely, just flat out as stock. But if we look at the prior graph, so every time it's been 56, this was back in like May 19th-ish, this was May 12th, this was end of April, throughout April. Every time it's been 56, 57, high of 58, it doesn't really like it and it comes right back down. It looks like it's right now like trading in this low 50s level between roughly $50 and $54.50. And I mean, AMD's all-time high right now is $59. So I fully expect over the next few days AMD to pull back again, and I think it's going to like trading in this Fibonacci level between 61.8% and 78.6%. The other thing is, another theory about technical analysis is filling of gaps. So if I change this graph, instead of a line graph, to candles, and if I zoom in, what you'll see is that we had essentially a big gap up, meaning AMD stock was trading at these levels here, then all of a sudden it just popped and then started trading up here. So if you believe in filling of gaps, then at some point AMD will want to fill this gap or fill this space by coming back down to like the 53 to 54 level. So, again, not all technical analysis, actually no technical analysis is 100% accurate, but like I said, usually when stocks pop like this, they will come back down to earth in my experience, and this is just my opinion. And like I said, every time AMD recently has been around the $56 level, it always comes back down to earth. So I'm fully expecting it to kind of slowly bleed down for the next 3 days, which is fine by me as long as it stays above $55. I don't think it's going to come down to 52 like it has been trading. I think we've been having a lot of pent-up demand, and now it finally popped as people were kind of wanting it to do. So that's my thoughts on AMD. We'll see how the week plays out and see if I get my shares called away or not. And like I said, I want my shares to get called away because I want to be all cash. In the future, I see this pattern repeating with AMD, and again, this is just my opinion, where once it trades in the low 50s, it does eventually, given enough time, go back up to like 55, 56, like the mid 50s. So there's always like a $3 or $4 or maybe $5 swing back and forth of AMD. So I think if I do get my shares called away, I'm going to try and get in and buy stock again in the low 50 range, and then try and ride that wave back up to 54, 55, and then cash out. It's been working lately, and if you look at the graph over the past month or so for AMD, it keeps kind of fluttering back and forth between low 50s and mid 50s, right? High 50s, low 50s, high 50s, low 50s. So it's kind of a pattern that's emerged in AMD, but we'll see what happens. Just because it's a pattern that's happened in the past doesn't mean it's going to happen in the future. But like I said, you guys have already known by now, AMD is one of my favorite stocks. If someone from AMD is watching this and you want to sponsor me, by all means, I love your stock and I'm very bullish on it. And I would love a new PC, hint, hint. But no, just kidding. So the other stock that I played yesterday was actually Micron, and another semiconductor stock. And as you can see today, Micron again opened up in the red and pretty much just traded sideways all day. But because of time decay, and I'll show you the stock option that I sold, I had sold a put on Micron at the $49.50 strike price. Right now, I still have a roughly 89% chance of profit, so I have a good buffer between where it's trading at 53 and some change and my strike. So I think I'm going to be pretty secure with Micron as far as expiring worthless for this week. But also, I sold it for $27 in premium, and right now it's only worth $17. So I'm already profitable by $10. So if I wanted to and free up this capital, I could close out this position by buying this option back. And I would pay $17 for it, but I sold it for $27, so I'd keep $10 worth of profit. But like I said, I have such a big buffer between where it's trading at now, even though it was another red day, and where my strike is, that I'm probably going to let it ride to expiration and just cash out, or get the full $27 of premium. But so those are my two trades that I have on for this week. So I have a put on Micron, and I actually have a strangle on AMD because I have both a put and a call on AMD. So for me to get my max money out of AMD, because my put is at the $50 strike and my covered call is at the 55, depending on how I want it, if I want my shares to get called away, then I want AMD to be above $55. That way my put will expire worthless, I'll get my full premium from my calls as well, and I'll get my stock appreciation. If AMD trades between 50 and 55, let me just show you on the options chain so it's easier to understand. So if AMD trades between $50 and $55, well then my put will still expire worthless because AMD is above 50. My covered calls will also expire worthless because I will collect the full premium, but because AMD is less than 55, I'll also get to keep my shares. The other scenario, and this is probably the worst case scenario for me, is if AMD drops below $50. So then I will get assigned 100 more shares of AMD at $50 each, and my covered calls will expire worthless. And I won't get any stock appreciation because my shares will not get called away. But so I will actually own 100 more shares of AMD. Not that that's just the end of the world, but I just don't want to happen. Like I said, I just want to be cash going into next week. But that was my trading day for today, and I've pretty much exhausted my capital for the week. So I'm going to let it play out for the next couple of days and see what happens. Now, one interesting thing, if you remember from my prior videos, today is the day, actually right now, is when Chewy is reporting their earnings. So this was on my watch list 2 weekends ago, and I never made a play on it, but I just want to give you an example of, if you remember when I told you to watch out for when stocks have earnings, and I personally don't play stocks or options when they have earnings that week, and this is why. So Chewy, opened up in the green, kind of bled up all day long, which is great. Stock is going up. So this is 4 p.m. So the market closed, and this is when obviously their earnings reports and the rumors and the hype starts. So 4:05, okay, it closed at 51.51. 5 minutes later, it's down a few pennies. It's 51.40. From 4:05 to 4:10, in those 5 minutes, Chewy went from 51.40 to 53.07. It just gained, $1.50. Okay. Then from 4:10 to 4:15, in the next 5 minutes, it dropped from 53.07 to 48.86. It dropped almost $5, right? That's crazy. 53 to 48. So, look at this roller coaster. It went from 51 to 53 to 48 in the matter of 10 minutes. And now it's trading sideways below where it traded all day long in the high 49s, low 50s. So this is why I don't like earnings, because there's so much volatility and the stock could go either way, like really hard up or really hard down. So if you had puts, your puts might have gotten tested. Or if you had calls, maybe your shares are going to get called away, depending on how you feel about that. But this is why I don't like earnings, because there's just so much volatility. And it's still only 5:30. There's still a lot of after hours trading left. And then there's pre-market tomorrow where the stock could jump up and down too. So you don't know. We'll have to see tomorrow morning where Chewy opens up. And then also what Chewy does during the day. Because if you look at the graph for Chewy and you go back in time, so its prior earnings were on April 1st. And as you can see, the run up to earnings, it kind of slowly bled down. Earnings happened, and if you look at the earnings, it actually beat earnings. The estimate was going to be down 16 cents a share, and it was only actually down 15 cents a share. So it was actually better than they expected, but the stock still went down. It went down for a few days until it started rallying back up. So this time, actually, something similar or something opposite happened, where it traded sideways up until earnings, and then it kind of rocketed up, and then we'll see what happens today. But that's why I don't like playing earnings, because there's too much variability and too much unpredictability. And if you want to, gamble, because the people that buy options, they like to play earnings because they're almost gambling, because they're betting on whether the stock is going to rocket up or rocket down, depending on if they're buying puts or buying calls. I don't like that. I think it's too speculative. I'd rather be the guy that's selling them the puts and selling them the calls, because like I said, I always have time on my side. And I also don't have to necessarily pick a direction. These guys that are buying puts and calls have to be right in the direction. So that's just my little blurb about why I never buy options. But let's look at the other plays I was thinking about this week was Disney. So Disney's been trading sideways again, traded sideways again today too. Right now it likes these like a 117 to 125 range, this Fibonacci level here. So not much action on Disney. I will say, for someone like me that likes to sell options and play theta or play time decay, I love stocks that trade sideways, because you can trade sideways. The stock's not going up, it's not going down, but time is still eating away at the premium, because like I said, time is always on my side. So I love it when stocks trade sideways, because it's low volatility, but I'm still making profits. And the other stock I was looking at was IWM, which also is very similar to Disney. It's been trading sideways as well. So same scenario. If I did end up opening a position on either two stocks, I just didn't, because the capital required would have been too much, and I wanted to put that money to use in other stocks. But I would have been okay too, I believe, because they're trading sideways. And like I said, time decay would have just eaten away at the premiums, and my options would have likely expired worthless. So one last thing I want to leave you with, if you remember my video from yesterday, I showed you this website barchart.com, and I showed you how you can go to options and then click on option volume leaders to see what the most popular options are this week. Look at number one option today, AMD $55 strike. That's my play right here, and you can see the volume was 83,400. Right now there's over 30,000 open contracts on that strike. So my two are two of these 30,626. So you can see that other people in the market also noticed that AMD just absolutely popped today. You can see that the first one, 1, 2, 3, 4, the fifth most popular, 6, 7, 8, and the ninth most popular stocks are all AMD. And these are all calls. These are AMD calls at the 55, 56, and $60 strikes. I mean, these people are really bullish on AMD. They think there's going to hit all-time highs, and these are all. So this is not a weekly. These are weekly options. So these are for not this Friday, but next Friday. So right now there are roughly 49,000 people that have open contracts that think AMD is going to hit $60 by next Friday. And now keep in mind, this combines people that sell and buy calls. So it doesn't necessarily mean that all these people have bought these calls or all of them have sold those calls, but it's just the total. But it just gives you a good idea of what the popular stocks were. Looks like Apple was very popular today too, at the second, third, and fourth positions. Let's take a quick look at Apple to see, what were people looking at. It's on my watch list, but I don't keep an eye on it just because it's so popular. So it looks like Apple popped today as well. It looks like around market open, it was trading around $332. and then it closed at $344. Let's take a look at it and see. So it moved 332 to 342. So it moved about, what, $10 in a matter of a day? So let's just see what percent gain that was. So, yep, Apple was up about a little over 3%. It moved $10.50 today. So that's probably explaining why the options were so popular. I guess people also felt that Apple popped today. I'm not sure if any good news came out or why that happened. This other stock, TRXC, I'm not familiar with. What is this? Transcentrix? Not familiar with this stock. It looks like it must be a penny stock. Yeah, it's only $1 per share, but this is probably some sort of hype stock or some pharma company or something, or some news came out that made it just pop. I mean, look at its implied volatility. It's over 400%. That's craziness. But some of the big name companies also that were popular today: Microsoft, Tesla, Facebook. There's Apple again. So I just find it interesting to see what other people are trading today. Just take a quick look. But I like that how AMD and the strike that I chose is the #1 most popular option for today. So just a little food for thought. This is, for posterity's sake. So overall, I had a great day today. I hope you did too. Let me know if you made any plays or how your options trades are doing. And as always, if you have any questions or comments, leave them below. And happy trading.